Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest trends from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. We'll also get you views from experts to find out where exactly should your focus be in the current markets. Of course, after the 6 days of a fall, the markets have rebounded quite sharply. Does it mean that we have already had a bottom in place? Also, we will focus on JP Morgan turning overweight on India, the three stocks that they have included in their portfolios. Which are these stocks and what do you have to do as far as your strategies are concerned respective to these stocks is something that we will focus on as well. Let's quickly look at how the Nifty is trading as we cross the half-time mark of the trading session. 177 points higher, 19,035 for the Nifty. You can see a 0.9% surge coming in for this one. Apart from this, let's also look at how the sectors are placed in trade. Most of the sectors are trading in the positive zone in today's trading action. Let's look at the Nifty Bank, the broader markets, as to how are they supporting the markets in today's trading session. Let's also look at the sector. So Nifty Bank, let's look at that one first to see if the banking and the heavyweight counters from the financial services are supporting the index today. The Nifty Bank is up by 1%, so smart gains coming in for this one, definitely leading from the front. We also have gains coming in on the PSU banks especially. This is the sector that is seeing the sharpest rise in today's trading action. Almost a 4% uptick, so it's kind of taking back all what the banking space had lost over the last few trading sessions. You also have a 2% gain on the realty space. The media stocks are doing well. IT is doing well. In fact, all the sectors of the Nifty are now in the positive zone. So it's a broad-based buying, a broad-based recovery from the last 6 days of a decline in the markets is what we had been seeing. Look at the India VIX level as well, down by 6% at 11 odd levels. So the volatility index is looking at some kind of consistency coming in. Let's also look at the top gainers on the Nifty. You do have Coal India, Bajaj Auto, HCL Technologies, NTPC, SBI, Nestle as the top gainers in trend. If you want to spot a trend, well, it's the energy names, power names like Coal India, NTPC moving up, PSU banks, FMCG counters. These are the stocks that are moving up. Reliance Industries, remember, is up by 1.7% at 2264 as well. So the heavyweight counter also supporting the move in the markets. From the F&O basket, you have Shriram Transport Finance, Canara Bank, RBL Bank, Trent and PNB also up in trade. So PSU banks definitely the flavor of the season. Let's get our expert also on the show. Mr. Kranti Batini now joins in, equity strategist for Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out. Well, first up, your reaction to the markets. We've been looking and getting worried about the consistent fall over the last 6 days, but a smart rebound has been made and the 19,000 mark looks protected again today. What do you expect in terms of the market outlook now, sir?
Yes, actually, at 19,000 is taken as the base right now. Market could be able to sustain above 19,000 right now, but we need to wait and watch how it can sustain above 19,000. But 18,800 market taken a strong, acted as a strong support zone in the medium to short term. What we can see is envisage at this moment in the market is actually one thing is the geopolitical worries are still on, and the market has there was a carnage in the market for more than 5-6 trading sessions. So we can expect some kind of bounce back and buying interest to come in the market at this point of time. The European Central Bank, they maintained the they have not increased any rate hike and they maintain a status quo without increasing any interest rates, which have prompted the global markets to be in a positive territory at this point of time. But the QC is by and large global in nature. The geopolitical issues one should not ignore, and one should not take in the current up move in the market for the granted. One need to be vigilant at this point of time while taking any kind of trading position. But investment position can be done at this point of time, but one need to be cautious at this point of time. I still remain a little bit cautious at this market juncture. We need to see some kind of follow-up rallies should come in the market, and market should sustain above these 19,000, which is psychologically important and also technically important for the market at this point of time. We do see some kind of selective buying that's taking place yesterday also, despite of the fall in the market. But these gains has to sustain. That's extremely crucial for the market at this point of time.
Right. Mr. Badini, let's also talk about JP Morgan turning overweight on India. Now it has joined the prominent list of global brokerages like Morgan Stanley, CLSA, Nomura by upgrading India to an overweight rating. They have attributed this upgrade to several factors, including positive seasonality associated with the general elections, robust growth in the emerging markets, the nominal GDP, and the development of a more extensive bond market as well, which is expected to decrease risk premiums. Help us understand, what is leading to this enthusiasm and what does it mean for the stock markets and the retail investors at large?
Sakshi, by and large, okay, the domestic macros, which we have been discussing from quite a long time, they are all in a positive territory at this point of time. But the key worrying factor is coming from the global markets. So coming to JP Morgan upgrading Indian markets to overweight position is in line with the other companies. And the point to ponder upon JP Morgan report is the increase in the activity of the cyclical nature of the market. So that means the the odds are turning in the favor of the economy and the market. So the high definition indicators have been in line with the market at this point of time. The PMI purchase manager index also showing a robust outlook of um, the the order book of the companies. So put together, all the factors are in line helping the India's growth at this point of time. Yes, of course, we do have in the nearer term the five state election results also can play a sentimental thing on the market sentiment in the medium to short term, and we have general election. So that is coming with a much longer perspective. But at this point of time, the the domestic macros are quite favorable with the Indian economy is concerned and Indian markets are concerned at this point of time. So the domestic things are playing very well, but one should not ignore the factors that are accentuating from the globe, from the different other parts of the world and the geographies.
Okay, understood. Fair enough. Sir, also, JP Morgan has now included three stocks from the Indian stock markets into its emerging market portfolio. So it makes sense for us to discuss and to decode whether these stocks also make a case for fresh investors to take a bet at this point in time as well. Now, the first stock, since we've been talking about the PSU banks being the flavor of the day, let's talk about the stock that they have included from the PSU banking space for the EM portfolio. Bank of Baroda is the stock that they have now added to their emerging market portfolio, especially when we talk about Bank of Baroda. In fact, the entire PSU banking space has been, an outperformer in the recent past when we have seen the markets really rally. But in terms of Bank of Baroda, let me just help all our viewers get a sense of what is the kind of move that we've already seen on Bank of Baroda. Currently under 200 rupees, even today it's up by 3% odd. But if we look at the last 6 months, the stock is up by 5%. Year to date, it's a 5% uptick as well. But in the last 12 months, 30% upside is what we have seen on this stock. In the last 5 years, of course, the stock has moved up quite sharply, 77% odd as well. Your thoughts on Bank of Baroda, and even at 195 rupees, would you be a buyer on this bank?
Yeah. Sakshi, coming to the Bank of Baroda is concerned, the stock was in news in the last fortnight, because RBI have banned one of their onboarding app like BoB World. It created some kind of selling pressure on the stock in the recent past because of this news. But the bank is in line. Okay, they're making the steps to increase their lending book and also increasing the productivity of the employees and making one of the in the PSU space a digital strong bank utilizing the technologies of the modern age. That's what Bank of Baroda has been doing in the past few years. And the bank had also have different mergers from the other set of PSU bank like Dina and some other banks which got merged with Bank of Baroda, which gives the bank the strength to utilize the franchising model and also reach out the public. Coming to the returns one can expect a mid-teen returns from these levels also, because of the growing interest of the lending book, and also the net interest margins can be under pressure in the near future, but it can improve over a period of time on a longer term perspective. But at this point of time, Bank of Baroda do offers good margin of safety for the investors. One can buy at dips. Bank of Baroda, rightfully below 200 rupees is a good price of entry for the investors who are looking for moderate returns in a medium to long term perspective.
Got that. Let's also talk about the other two stocks. One is from the pharma space, the leader in the pack, Sun Pharma. That's another stock that JP Morgan has now included. Talk to us about the pharma space, sir, and help us understand what do you make of the sector and the growth outlook going forward. And within that, is Sun Pharma a good stock to really look at? Past 6 months, 14% upside is what we've seen on the stock already. But we've also seen a long period of underperformance from Sun Pharma. It's finally started to move up and has now reached its multi-year high levels as well at 1,117 right now, 1.5% uptick for this one. But in the last 6 months, the move has been quite encouraging from if we see from what was the level in May to what is the level in October as well. Your thoughts on Sun Pharma, sir?
Yes, actually, Pharma has been a underperformer in the past sorry, 4-5 quarters, and some kind of selective buying we do observe in names like Sun Pharma, Cipla, and Lupin. But the idea behind JP Morgan selecting these stocks is they look for the stocks which offers a good margin of safety for the investors, and offers a good attractive valuation for the investors on a relative basis. So that's the reason Sun Pharma, it do offers a good margin of safety for the investors, and also the relative valuations are attractive for Sun Pharma. So investor with a less moderate risk appetite also, they can buy the stock more in a long term perspective at any dip. Okay, there is no need to buy jump and buy the stocks immediately. Okay, at dips probably one can accumulate the stock for a medium to long term perspective. The stock too offers margin of safety, and also relative valuations are attractive at this point of time.
Okay, and the last stock that they have included is from the FMCG pack. Again, the leader in the space, HUL, is something that they have turned bullish on and have now included in the emerging market portfolio. We always talk about the consumption space and how the consumption is picking up in this latter half because of the festivities as well, especially for the FMCG makers like HUL. Also, this is a good time to see higher sales, great volumes at this point in time. The stock is definitely a little higher priced. It's 2,485 compared to the other two. In the last 6 months or year-to-date levels also, the performance, however, has been dismal. Last year-to-date level, if you see, this stock has actually given a negative return of 2.8%. If you compare it with the kind of return the Nifty has given, that's in the positive. So HUL has not really performed. Even on a one-year perspective, the share has not really performed. Of course, long-term 51% return over the last 5 years is what we have seen. But what do you really have to say about HUL? Is this a good stock to be in the FMCG space?
Yes, Sakshi. Coming to the recent quarterly results, they given a decent set of numbers, and some kind of margin pressures we do witnessed with respect to HUL is concerned, as the stock performance has been is in a very subdued performance for a medium to longer term perspective. But what we do expect, if the stock one have a much bigger longer term horizon, like 3 to 5 years, the stock try to give a moderate CAGR return of 12 to 15% on a longer term basis. So the strategy behind selecting HUL for JP Morgan, what I can conceive is it do offers a margin of safety. It have a strong earning outlook going ahead due to the improvement in the domestic macros, and also the rural consumption is concerned in the next couple of quarters. So this is the investment rationally probably for JP Morgan to select HUL as the preferred bet for from India. So investors with the same kind of low moderate risk appetite, they can buy the stock at dips.
All right, fair enough. Thank you so much, Mr. Batini, for being with us on the show and discussing with us insights on the
Thank
markets
you. Always
and
my
on the
pleasure.
JP Morgan report as well. Great to have you with us. The market's ticking higher,
you.
174 points uptick for the Nifty, 19,031. Remains to be seen if we continue to hold this ground and perhaps also see some uptick further from these current levels towards the end of the session as well. But definitely a big breather for the markets and for the investors after this last 6 days of a massive sell-off that we had been witnessing. Stay tuned with BTTV to find out what are experts really saying as far as stock markets go.
As the date of the inauguration of the Grand Ram Temple in Ayodhya has been announced, now Ayodhya is preparing itself in all terms so that the people who will be coming to Ayodhya will get the accommodation. It will also give a boost to the economy of Ayodhya. I'm here right now at one of the hotels here.